Hello, my name is Modeste from Greylock Capital Management, and you're watching AFK Insider. I mean, there are a couple of challenges there, and some of them are rather funny. In terms of investing in the value chain in Africa, I think that you've got to get on the ground for sure. I think that in a place like the UK, the US, you can rely on, websites to deliver information, news services, Bloomberg systems, financial reports that are accurate, viable, and proofed, but and not that those aren't available in many parts of the continent, but I think it's really important to get on the ground to see the opportunity itself. So, myself, other individuals like Greylock spend a lot of time on the ground on the continent, looking at opportunities, speaking with individuals across a host of areas and sectors to really see what's going on. I think another thing that we're seeing governments do is what's called import substitution. So in the case of, for example, we saw a company in Senegal. They're, for the most part, they make beverages, milk, dairy products, juices, things like that. But they also imported tomato paste from China. And in many cases, this was sourced from tomatoes imported into China from Senegal, processed into a very concentrated paste and imported back. And if you know Senegalese cuisine, that tomato sauce is a very key part of the diet. And really, there's no reason why it should be sourced from as far away as China. So what the government did was increase the tax levy on imported tomato paste to encourage domestic production. So we spoke with a company that was looking to do something simple as developing a processing plant to increase the tomato production capacity so that could be sold very profitably within the country and lower cost to consumers, increase the quality of the product by having a fresher product. Super simple opportunity that I don't think would have been as apparent how good of an opportunity that would have been if I had been looking at that from abroad. I mean, I think the key thing of being on the ground is not just kind of visiting the country, but really having a strong partnership framework and really having multiple avenues to get information and to kind of affect change. So in the case of Greylock, we are not just kind of coming in there for a single deal in Africa, for example. This is a case where, let's say Ivory Coast. Greylock started investing in Ivory Coast probably in the mid-90s. Most international investors weren't even aware that there were investment opportunities there. But there were on the sovereign side. In this case, it was debt restructuring. And the way that we handle sovereign debt restructurings is we look at what is the fastest, most efficient way for this country to move towards restructuring this debt. Because when they do that, they can issue a performing sovereign bond. When they issue performing sovereign bonds, they can then develop the domestic capital markets and they issue treasury bills and things like that. And then when that gets done, corporations within these countries have opportunities to borrow locally, to grow, to develop, and then we really see the opportunity to invest in the private sector as a long-term goal. So our situation with the Ivory Coast is to work collegially with them, to work through the restructuring. We've done that in Liberia, we've done that in the Republic of Congo, we've done that in a host of other countries. So for us, what we really look to do is develop a strong framework within the country of legal advisors, of government officials, of private sector officials, so that when we're looking at a private sector deal, we're not just kind of looking at it in isolation, but we can really draw on the breadth of relationships we've built over the past, in many cases, 10 to 20 years. I think the interesting thing about some of the investments we've seen in Africa is that the regulatory framework can actually hold up well. It's not always going to be the case, but we've had certain private sector investments where we've had to do things like go to court or get judgments enforced or have legal action taken. That in the long run was going to help that deal, but in the short run could have been certainly challenging. And in many cases, to our surprise, we've actually found that to be much easier and more straightforward than we would have anticipated. I mean, I think there are a couple of misconceptions that might come with investing in places like like certain countries in Africa. I think the one thing that I would advise first is everything takes time and maybe a lot longer than you might have anticipated. So we opened up an office in Ghana, and it took maybe 6 months to start a checking account. And it's not the case that would be in the United States or the UK, but we eventually were able to do it. But I think many of the local banking institutions are growing, they're getting stronger, but in many cases authority needs to be given from an office in either Johannesburg or the UK or the US. So I think certain things just take time. So I think patience is definitely a key factor. I think the other thing I would advise is really look to as many sources as possible for information. So if you're a new investor to a country, kind of start with, go to the embassy for your country and speak with the political officers there, speak with the economic development officers there, speak with local banking officials, speak with kind of corporate entities, and really get as much information as possible before making an investment.